Hello guys, how are you doing today? Welcome to the next day live stream gold trading. I hope everyone is doing fine. So today is July 27 and yesterday was FOMC. We got FOMC and gold price rose to almost, let me check it here. Oh, it was yesterday up to 1982. All right guys, 1982, and now it's consolidating. It's back to the 1950 range price level, and then it's again moving, right? So guys, how are you doing? I just took the trade. I just closed the trade. Let me show you guys. And it was like okay, I just closed at 8 pips profit. Let me tell you guys why I take this trade. So when I first look here, I first look at the H1 time frame, and there was a nice bullish red candle in H1 time frame, and in 30 minutes time frame there is like, let me show you guys here by doing, there's like downtrend, and there was a slight pullback and like this, right? And then I looked at 15 minutes for my entry. So when I see it, what I see is downtrend and little bit of pullback, then again downtrend, right guys, and little bit of pullback, and there was a confirmation candle. Okay, there was a confirmation candle like this. Let me make it blue, sorry, red. Okay guys, there was a confirmation candle, so I just enter at the low of this 15-minute candle, because it fulfill our strategy, our setup. So I enter at the low of this, at the break of the price level of the low of this red candle. Let me zoom a little bit guys. Here, can you see it guys? Here, right? So I enter here, and then as the candle was moving down, I was constantly monitoring the 5-minute candle, and because I closed it here, because there was a resistance lines here in the 30-minute time frame. Let me show you guys. Here, and there is a slight resistance. Okay, so I exit the position, and also in the 15-minute time frame, let me show you guys. I didn't consider as a very safe trade, because there is a lot of wicks here, right? There is a lot of rejection wicks on the left side of this candle here, like 1 2 3 4. So as soon as I backed like 8-9 pips, I just closed the position. Okay guys, so most probably at this price level 1976 price will range. So guys, for today I already took one trade. So what I will do is just I will watch the structure and just I will watch the pattern of the candle movement. Okay, let me put okay. Wow, the candle is still moving down. That's great. So if you guys are still holding the position, that's really great. So maybe today or tomorrow, in few days, maybe in the weekends, I'm going to okay guys, let's see. So if this 15-minute candle closes below this week, we can still take the next trade. We can take the our second next trade. Okay guys, but let's not hurry. It's still pre-London, and pre-London yesterday it was consolidating a lot, and day before yesterday, and like from Monday and before that was also in pre-London, candle were like in the range. So at the London Open, there was some volume. So let's not hurry. So let's wait for 1 hour candle or maybe 30 minutes candle to close. Okay guys. Let's see how this 5-minute candle close. Oh sorry. Yeah. Okay, this 5-minute candle closes below this price level, like below this 19 no, sorry, above this 1976. Anyway, I'm done for the day, so just I'm not taking any trade. I'm not losing my few profits I have made, so I don't want to lose the profit, so I'm not taking any more trades today, maybe tomorrow. And this 30-minute candle closed with very small bottom wick or no bottom wick, so that means for the as I've already told, for the most of the time, it's not always true, most of the time for the red candle, if there is a nice bottom wick, then the next candle can move, right? Okay guys, so because I closed this position, because you guys, you can see here for this red candle there is a big wick, and there is also a big rejection wick, right? So I didn't feel safe to hold my position, so I just exit like 8-9 pip profit. Okay guys, let's see the movement. we wait. Okay guys. Okay. Most probably at this price. Most probably at this price level, 19 here, 1976 price might be consolidating, and let's see. It's not something that we can predict, so but looking at the spread, most probably we stay out of our trade. Okay guys, because it's not the time where a lot of traders come in, so price will just fluctuate up and down haphazardly, but it must, and in such case the price will not be showing a nice trend. Okay guys, let's see. guys, let's check some news. Today we have big news. We have GDPs and we have unemployment claims at 30 p.m. Okay guys, so price is really kicking in now. If you guys are still holding your position, it's really great trade, because on the daily time frame there is a very strong resistance, so most probably the price is bouncing back, okay, from this level, so it's most likely going down. Guys, this okay, only if there were no wicks on these three long, you guys can see, right? These wicks are really long wicks here. This 15-minute time frame. These wicks are really long wicks, 1 2 3, so I just only if there were no wicks, they were like normal wicks. If there were no like these long bottom wicks, I would have hold my position, but since wicks are so long, I exit my position. Let's see guys, price is still moving down, price can still move down. But you guys can see here, right, the spread, you can see the spread is too big, so it's better for the day traders like us, it's better we do not keep our position when we have a large spread. Okay, guys, we miss like, let's see, it's still moving down. We miss some pips here, so we may have like the feelings of greed or feelings of missing out, but it's okay guys, it's in trading, it's always okay, there is always next opportunity, so we just wait for our next trade. Okay guys, so no need to worry, there are so many candles and the candles are always moving, so it's for sure that we will get next trade. Okay, so we don't need to worry about what we missed today. Okay guys, so we just wait and watch. Okay guys, let's see some of the news, if there are any interesting news, and let's check yesterday news. Okay guys, today we have GDP and we have unemployment claims at 8:30. Okay guys, so GDP, they are showing us the lower number, that means the gold might push up, but the number is almost same, right? Okay, so I don't expect to see that much huge movement in the gold. And unemployment claim, it's showing the numbers which is greater than the previous. Okay, the forecast is greater, but still it's greater, so GDP is showing slight movement upward for the gold, and unemployment claim is showing that the gold will move slight, so it's like the mixed kind of forecast. So most probably at the news there will be volatility, but most probably the gold will range, okay, today at the time of news. So let's check some of the news if there are any. Okay, let's check. Federal Reserve issues FOMC statement. Fed's Powell, I don't see inflation back at 2% until about 2025. So the main aim of the US economics is to reduce, is to bring the inflation back to the 2%, guys. Okay, but still it's very difficult. Let's see what it says. The Fed could continue balance sheet runoff while lowering price rates under certain circumstances. Specifically, policy normalization from restrictive levels to more normal levels, lowering nominal rates to maintain real rates could allow for QT to continue. Okay guys, that's great. Yeah, so there is the rate hikes. Let's check FOMC statement. Recent, okay, Fed hikes by 20 bps to 5.50. So it was like 5.25 last time, so it's like 5.50 from yesterday FOMC. Okay, Fed will continue same pace of reducing treasury and MPS holding. Fed repeats will take cumulative tightening lags into account. Fed inflation elevated, highly attentive to inflation risks. Fed repeats tighter credit likely to weigh on activity. Let's check full story. It's downloading PDF. Federal Reserve press release for release it. Okay, let's check chart once and then we. Okay, it's really nice moment. Okay, guys, it's really pushing down, but not so much. It's still consolidating. Let's check. There is no volume. Okay guys, so like last few days there is a high volume coming in the London Open. So today also around 3 am EST we'll get we might get some volumes. But guys, there are big news, unemployment claims and GDP, so most probably price will be consolidating before the news. Okay guys, okay, let's check the Federal Reserve press release. Recent indicators suggest that economic activity has been expanding at a moderate pace. Job gains have been robust in recent months and the unemployment rate has remained low. Okay guys, inflation remains elevated. So simple for the gold, how we can relate the gold movement with this for the US economics, like GDP, PMI, unemployment claims, jobless claims, NFP, and if the data of these values comes less, okay, if these are okay, let's say less than the previous value, then gold will be moving up. Okay guys, so if this US economic indicators value is good, okay, is better, then gold will be if the number is better, if the number is high, if it's the good, okay, if it's good, then gold will be moving down. Okay guys, why this happen is that whenever US economics is bad, then the people will start investing in the gold. Okay guys, people will start investing in the gold whenever US economics shows bad trend, then gold shows good trend. Okay guys, so whenever US economics shows bad trend, people starts investing, buying gold. Okay, institutions, people and nations, they start investing in gold and buying gold. That's why the price of the golds moves up. Okay, it's like that. So let's read this. The US banking system is round and resilient. Tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. Okay, guys. The committee remains highly attentive to inflation rates. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. So it's not getting the 2% at something in near future. So for to reach the 2%, the better is yesterday FOMC has already said, like it might take up to 2025. Okay guys, the committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Okay guys, over the long run means like by 2025. In support of this goals, the committee decided to raise the target range for the federal fund to 5.25 to 5.5%. Okay, so yesterday there was rate hikes by 25 bps. Okay guys, from 5.25 to 5.5. The committee will continue to access additional information and its implications for monetary policy in determining the extent of additional policy forming that may be appropriate to run inflation to 2% over time. The committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In addition, the committee will continue reducing its holdings of treasury securities and agency debt and agency mortgage-backed securities as described in its previously announced plans. The committee is strongly committed to returning inflation to its 2% objective. Sooner it's not coming to 2%. There's still rate hikes, like yesterday it was from 5.25 to 5.5. So dollar index is not going up, so gold price will still go up. Okay guys, it's like that. In accessing the appropriate stance of monetary policy, the committee something. Okay, it's how many pages? It's 2, 3, 4 pages. Okay guys, let's not read all of this because our trading strategy doesn't depend much on the news, so we don't need to care much about the news. But as a whole, as a big picture, US economies is not good. It's showing bad trend, so gold price can still move up. Okay guys, so let's check out chart again. Okay guys, so price is just ranging here. We do not have nice volume, so price is just ranging. So guys, let me show you my strategy, how I take my trade. Tomorrow or day before, in few days I will post my strategy. I have already prepared my PDF file. At my free time I will upload the video. Okay guys, but for now let me just show it on the screen itself. So here guys, this is the daily time frame, this is the 4-hour time frame. This is, we have H1, we have M30, we have M15, we have M5. Okay, these are the time frame. So the most important time frame which I look are like, first of all I need to see if my strategy, if my setup is going to happen or not. Okay, for that, if it is going to happen or not, I see that, I search for that on H1 and M30 time frame. Okay, so if I see like if my setup is going to happen, I can see that on I look for that on S1 and M30 time frame. Okay guys, and after I see like, okay, it might be happening, then I look at M15 and M5 time frame for my early entry. Okay guys, so just like just like I took the trade, like my first trade here, I took this. Let me zoom it. It's a good nice example. Okay guys, this one is, let me zoom it more, okay, let me zoom it. I'll show you guys. Okay guys, I'll show you guys how I take my trade. Okay, let's see. Zoom out. Okay guys, there is a very simple concept. If the previous candle is nice bullish candle, then this present candle can also be bullish candle. Okay, so if the previous candle is nice bearish candle, nice red candle, then this present candle can also be bearish candle. Okay, so this is true, this holds true most of the time for higher time frame like H4, like daily, H1 and M30. Okay guys, so first I look at the candle. Okay guys, so what I did is, in the H1 time frame, this is the green candle, this is the green candle, this is the red candle. Okay guys, so most probably after this candle is going to be red candle. Okay guys, this candle is going to be red candle. So I look at 30-minute time frame. Okay guys, so I started looking now. After that I make like, I started looking for my early entry. So I then scan my 30-minute chart. Okay, what I see that this is red candle, this is green candle, this is red candle. Okay, so whether I wait for this candle to close, or if I can get early entry. Okay, that's what I mean by early entry. So here I then went to 15-minute time frame. Okay guys, so when I see the 15-minute time frame, there is a very nice setup. Okay guys, there is the red candle, then green candle, then red candle, and this red candle has nicely closed. Okay, so I entered at the low of this candle. Sorry guys for the interruption. So if you are watching my live stream, please like and subscribe my channel. So what I did is, so whenever I see 30-minute time frame, I saw this candle hasn't it closed. Okay, so I was looking for the early entry, so I entered. So I look at the lower time frame. Okay, so I look at the 15-minute time frame, and there was a nice red candle, so I entered at the breach of the low of this red candle. Okay, like that. Okay guys, that was my entry. So basically it's very simple concept. This is the nice, very nice picture. Okay, let me take here, let me take a snap. Okay, let's not do this. Okay here guys, and let me show you again how I take my trade. So guys, price moves in waveform. Okay, like this is a very nice example. Price moves in waveforms, like down and slide, minor counter trend, then trend, then minor counter trend, then trend. Okay guys, so this is the perfect example. Okay, this is trend, and we have minor counter trend, this green candle, then we have trend, this one, these three red candles, then we have minor counter trend, these two green candle, then we have trend. Okay guys, so where we take the entry? Okay guys, the entries we can take here after we get our confirmation candle. Okay, after we get red candle, we enter here. Okay, after we get the confirmation candle, so we buy at the dip, we sell at the top. Okay guys, let me write it here. Buy at dip, next text, buy at dip, where is the text? Okay, sell at top, sell at top. You know guys, let me show you my PDF. Okay, I'll show you my PDF. Let me zoom out these things first. Okay, let me zoom in like that, this one, zoom out, then zoom out. Okay guys, let me show you my PDF. Okay, let me make it. Let's wait. Okay, so guys, welcome to the part where I'm going to tell you guys how I trade gold. Okay guys, so this YouTube channel is a very new YouTube channel, so if you guys are watching this video, if you guys are watching my live stream, please like and subscribe the channel. Okay guys, so now I'm going to tell you my strategy how I trade gold. Okay guys, so gold trading live stream, we take one trade per day and we stream London and or New York session. Depending upon if we get our trade in London session, we close our live stream. If not, we continue our live stream in New York session as well. Okay guys, so let me go to the next page. So in this part I would tell you what I trade, when I trade, do I use indicators, how I trade, how I make entry, and some examples, and finally trading psychology. Okay guys, so instrument I trade is only gold. I don't trade currency pairs, I don't pair stocks, I don't trade bitcoins, I only trade gold. Okay guys, so because guys, forex trading is open for like 24 hours, so the session I trade is from pre-London to New York session, sometimes NYSE open, and sometimes maybe till London close. Okay, so number of trades I take is just 1 to 2 trade. Okay, 1 to 2 trades a day, and I am an intraday trader, and my stop loss and profit target is just like 10 to 20 pips. Okay guys, no more than this, and I don't use any indicators, no indicators, and I am pure price action traders. And that means I only look how the candles appear on the chart, the size and shape of the candle, wicks of the candle, and the relative size of the candle, how they are printing, how they are making the patterns. I just trade based on that. I use no indicators. Okay guys, let's move to the next slide. So how I take trade. Okay guys, so most of the trade I trade are based on the H1, M30 30 minutes and M15 time frame. Okay guys, most of them time out of these three, most of them are on the M30. Okay guys, so what is the pattern of my entry? I have the same pattern of the entry, whether I take the trade at the break of high or low of the confirmation candle after a minor pullback, that means minor counter trend, and whenever I do that at smaller time frame, that means on M15 or M5. Okay guys, and the next one is I take the direct entry. Direct entry means it's the break of the high or the low of the pullback candle. Okay, and most of the time I take trade is on the H1 and M30 time frame. So it's like in H1 and M30 time frame it looks like it is a direct entry. Okay guys, but most of the time when we look at the M15 and M5 time frame, it's not the direct entry. We have the full-fledged indirect way, like there is the formation of minor counter trend and there is the formation of confirmation candle, and at the break of the high or the low of the confirmation candle we take the trade. Okay guys, so even if it seems like direct entry at H1 and M30 time frame, it's actually there is everything formed in the lower time frame. Okay guys, so let me show you the chart. This one, let's look at this candle. Okay guys, so candle is forming the downtrend. Okay guys, there is a minor counter trend. Okay, this is downtrend is the major trend. Okay guys, this downtrend is the major trend. Then there is the minor pullback, I mean minor counter trend, and there is the formation of confirmation candle. So I enter trade here. Okay guys, I enter here, I enter at this position. Okay guys, so I enter at the, this is the confirmation candle. This candle is too small. Okay guys, this candle is too small, so I wait for the bigger nice red candle. So our nice red candle is formed, so we enter. This is the confirmation candle, so we enter at the break of the low of this candle. Okay, this is the one example, and let's see the next example. Here in this candle we have the nice uptrend, we have the minor counter trend, that is downtrend, and then we are looking for a nice confirmation candle. Okay guys, so this candle is okay, this candle is fine, but still what we can see is that there is a resistance up here. So we wait for one green candle to break above, to close above this price level, and then we take our trade at the break of, and then we take our trade at the breach of this price level above the high of this green candle. Okay guys, so it's like that. It's very simple. This one is, let me tell you again, so this is the major uptrend, this is the minor counter trend. Okay, that is downtrend. So we look for a nice green candle so that we can take the position. This one is the green candle, but we don't take the trade because there is a slight resistance over here. So wait for green candle to breach above this and close above this price level, then we take the trade at the breach of high of this confirmation candle. Okay guys, so this is the confirmation, candle. So this is the pattern. So we have the major trend, we have the minor counter trend, we wait for confirmation candle, at the break of the low or the high of the confirmation candle we enter our position. Okay guys, so this is very simple technique, and this is the only one technique I take whenever I trade, and nothing other. Okay guys, no indicator, nothing other, just price action, simple price action, just one strategy. Okay, just one setup. Okay guys, it's like that. So it's like this one setup, and it always repeats, so I take the trades on the same setup. Okay guys, so no need to be worried. Like if you have 1000 setups, if you have many setups, that doesn't mean you are going to take winning trades. Just work on one setup many times. Look at the chart, look at the setup, just one setup, practice it, be master in it. Okay guys, so that's the secret for success in trading. So let's dive further. The next pattern is how I enter the trade. Okay, the same I said, like direct entry. So for this is the major downtrend. Okay guys, so this 3 green candle is the minor counter trend. This candle is also, you can say, minor counter trend. This one is also a minor counter trend candle, and sometimes we can enter at the break of, sometimes we can enter at the breach of the price level of the low of that impulse, this candle. Okay guys, this is how we do. Okay guys, so most of the time this is happens in the higher time frame, in H1 and M30 time frame. Okay guys, this is called direct entry. Okay guys, I hope you guys are keeping up with me. So let's look at this next slide. So how I correlate different time frames and take entry. I start looking for my entry based on H1 and M30 time frames, and make entry based on lower time frames M5 and M50. Okay guys, So whenever I start taking trade, it's not like I look at only one time frame. So you guys can see on my screen, I look at the 6 different time frame at one time. So I first look at 1 hour time frame and then 30-minute time frame. In the 1 hour and 30-minute time frame, I start looking whether my setup going to form or not. So if I see the setup is going to be formed, then I'll go to the lower time frame for my early entry. Okay guys, that means on M5 and M15. Okay guys, so let's see some examples. This is the H1 time frame, and you guys see this candle. I have drawn the vertical line here, this candle. So before this candle, this is a nice red candle. Okay, so the concept is, if we have nice red candle, then most likely the next candle will also be red. Okay, so it is true for higher time frame like daily time frame, S4 time frame. Let me connect it nicely first. Okay, now we are connected. So this is in the 15-minute time frame. This is downtrend. This is main trend. This is minor count trend. This is small green candle. Then there is starting of formation of confirmation candle. So this candle is small red candle, and we have a nice big red candle formation. Okay, so we can enter either at the breach of the price level of this small red candle, but since this candle is really small, I won't enter this trade. I will wait for this candle to form, and then I will enter at the breach of this low of this red candle. Okay guys, this is how I enter the trade. So let's check how M5 is formed. Okay guys, okay, M5 is really nice. There is a major trend, okay, downtrend, and there is some ranging consolidation here. Then there is minor counter trend. Then there is formation of confirmation candle. Okay, this is the confirmation candle. But since there is a strong support, we wait for this support to breach and close the candle to close below this support. We wait for this 5-minute candle to close, and then we enter at the breach of the low of this 5-minute candle. Okay guys, the breach of the low of this candle. So this is our trading candle. Okay guys, this is our enter. We can also, if there were no support like this, we can enter also at the flip of this candle. Okay, after because we have this amount of lower wick to fill, we can also do that. But since there is a strong support, we wait for the price to breach this price level and close below this price level, and then we take entry in this new 5-minute candle. Okay guys, let's look at another example. This is H1 time frame. Okay guys, so this is a nice green candle, and it is closing above this resistance level. So in my mind, I think the next candle most probably will also be a nice green candle. Okay guys, so I started looking for my early entry. Okay guys, so I scan M30. Okay, M30 is also giving a nice, very nice here signal, and this is the resistance. 30-minute candle I had already closed above the resistance, and there is a nice upper wick, and this is very perfect setup. Okay guys, so 90% of the time, this 30-minute candle 90% of the time will go up. Okay guys, it will be green candle. Okay guys, so I start looking for the early setup, and then I started looking for M15. It's like there is a major trend, then is a minor trend, minor counter trend. This red candle is a minor counter trend, and then we wait for a nice green candle. Since there is a there is a resistance here, so we wait for the nice green candle to close above this resistance. So we wait for this close, and then we take trade above this, or we can see that we scan for M5 if we are getting earlier entry. Okay guys, so we also scan for M5. So when we scan for M5, it's really nice. When we scan for M5 is giving us signal for early entry. So this is the major trend, this is the major uptrend, this is the minor counter trend. Okay guys, this is the minor counter trend. Then we look for nice green candle to form. Green candle is formed. This one is nice green candle, but we can see a resistance here. So we wait for one green candle to close above this resistance. This candle closes above the resistance, and then we take trade at the breach of the high of this green candle. Okay guys, it's as simple as that. Okay, let's look at the last example. This is the H1 time frame. Okay guys, this is the H1 time frame here, and this is the H1 time frame. So this one is the major trend. Okay, this one is the downtrend, major trend. We have a minor counter trend. So in this case, we can take the direct entry. If we are looking only at the H1 time frame, we can take the direct entry at the break of this green candle. Okay, at the breach of the low of this green candle, and we can put our stop loss above the high of this candle. Okay guys, but since we are looking for earlier entry, we scan down to lower time frame. This one is M30. So guys, we can see after the formation of this candle, this is the major downtrend. Okay guys, this is the major downtrend, this is the minor uptrend, this one big green candle, and then the candle is starting following the major trend, that is the downtrend, and this is the nice red candle. But we still wait for the price to breach below this, to close below this price level, because this is a small support. We waited for this candle to close, and then we enter at the end of this candle. Okay guys, or some of the guys, because this candle has no top wick and this has a nice bottom wick, we can enter here, we can enter at the flip of this candle, and then move our stop loss to break even as soon as this price level reaches the low of this nice red candle. Okay guys, then we keep holding our position, and we can also do like that. Okay guys, so let's check. This is the 30-minute time frame, this is the 15-minute time frame. So in the 15-minute time frame, this is the major downtrend. Okay guys, this is the minor uptrend. Okay guys, this is the minor downtrend, okay, major downtrend. Okay guys, so this is the downtrend. But why is it necessary for this candle to close below this support line? Okay, you guys can see in this example, this is nice red candle. Okay guys, but this candle doesn't close below this support. Okay, so we are not taking the position, we wait for next candle. Next candle is a green candle. Okay guys, so we wait for this red candle to breach this price level and close below it, and then we wait to take our trade. As soon as the price breaches below this price level, below the low of this candle, we take our trade. Okay, so this is our trading candle. Okay guys, this is our trading candle. Okay guys, this is the 5-minute time frame, sorry, 15-minute time frame. Okay guys, and we can also further scan down. Okay, because I look like 6 charts at a time, and we can see everything at a time. So let's see if we have a nice entry. Okay, we have a nice entry on better entry, better look at the 5-minute. Okay guys, this is the major trend, this is the minor counter trend. Okay guys, this is the major trend, this is the minor counter trend, and we have one small confirmation candle, but we do not take the trade below it because we have a small support here. So we wait for the price to breach below it and close below it, and this 5-minute candle breach below it, close below it, and so this is our confirmation candle. So we take the trade with the break of the below of this candle. Okay guys, so this is our trading candle, 5-minute, this is our trading candle. Okay guys, so these are the few examples I gave to you. Now let's check the trading psychology. Okay, so we do not most important trading psychology is we take one trade per day, just one trade, at most two trade, and because we are the intraday trader, we just aim for 10 to 20 pips per trade, and our stop loss is also like 10 to 20 pips, we risk 1 to 2%. And because trading is not something like pre-planned, it's like based on our probability mindset. So whenever we win, we do not get overexcited. Whenever we lose, we do not get disappointed. So we control our emotion. Okay guys, so we do not get overexcited with our wins, we do not get very much disappointed with our loss. We take one trade a day, no matter whether we win or lose it, we do not give up. And we do not give up because trading is not like based on one day result, based on 1 week result, it's based on months result, it's based on results of years. Because I loses 5 trades back to back, or I lost 10 trades back to back, it doesn't mean I quit, I give up. It doesn't mean that, because sometimes we might lose like 10 trades back to back, but that doesn't mean we are bad at trading. Sometimes these things happen. So we need to base our trading evaluation over a long period of time, not over a single day or a single week. Okay guys, so we keep learning from our mistakes, and trading is not a 100-meter sprint, it's a long marathon. We evaluate our performance based on months and years, and not based on this. Okay guys, this was a simple trading strategy. I gave it to you, my trading strategy on this live stream. So I hope you guys can get something out of it. So I will cut this clip and again post this video in my channel. Okay guys, so guys, thank you very much. Okay, so okay, let's look at our chart. Let me close this. Oh wow, the price is really moving down. This guys, price is really eating down. Oh, it's great. Let's see. Really nice. Zoom out. So in this chart we can see this is the daily chart, and this is a nice big resistance here, like this time, right? You can see 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16. So this is a very 1980 price level is a very strong price level. So most probably price will fall down from this price level. Okay guys, so if you guys are holding your position, that's really great. Sometimes what happens is, like, sometimes we take the trade, right, and then we close it by like 5 or 6 pips, and then the price starts moving like 50 pips, 60 pips. Okay guys, so in that time we might feel like, oh my god, we miss so much. So guys, these things happens in trading. So like we close it 3-4 pip thinking that the price is going to consolidate, but sometimes the price moves like 50 pips, 40 pips, sometimes even 60-70 pips. So it's just like that. We can do nothing about it. We can we can discuss, we can do nothing about it, just leave it guys. It's we wait for the next day, next timing, and then we again take the trade. Then we can control about it, we can do nothing about it. Okay guys, it is what it is, it's like that. Okay guys, this is not something we can control, so just leave it guys. If we miss, we miss, don't worry about it. the price is just changing. Okay guys, you can take sell if, okay guys, no, we cannot, in our strategy the price can move down here, but still we need to confirm it. If this red candle in 15-minute time frame it closes below this green candle, then we can look for sell. Okay guys, otherwise we wait. And also we have already taken one trade for today. Now we do not bother taking any more trades. Okay guys, let's wait. You guys, you can see on 30 minutes. Let's wait. We are near London Open. This is 30 minutes, this is 1 hour. Let me zoom out. 30 minutes. Okay, let's see. So guys, if this 30-minute candle closes like this with nice top wick and green candle, we can look for our early entry from the M5 and M15. Okay guys, but let's wait. This green candle has already breached above the high of the previous red candle. Let's see. And looking at the H1 time frame, this, if the present candle breaches both high and low of the previous candle, then the price will most likely consolidate. Okay guys, so we need to stay away from the trade at such times. Okay guys, do you have any news at 3 AM? Let's check. No, we don't have any news in the morning. Only at 30 we have our news. Okay, if this red candle closes below the low of the previous green candle, we can look for sell position. Okay guys, let's wait and see. But we have already taken one trade, so we do not bother taking any other trade. Okay guys, we just see the candle moving, price moving, and see if our strategy works this time or not. Okay, that's it. We do not become greedy, like just watch and see. So guys, some of you guys can make a direct entry upon the break of the low of this green candle. That's the direct entry, or we can just wait for this red candle to close below this support. Okay guys, but since it's a London open time, you guys can directly re-enter as well. Okay guys, you can enter, some of you guys, if you wish, you can enter. This is a London open, and most probably there is going to be a volume. Okay guys, during London open. Okay, the price is being volatile. The price is being volatile. When price is volatile, it's really dangerous to take the trade. It's not safe, so we stay out of the position. Okay, 1 minute to close. Okay, wow. Okay, you can enter at the break of the law. Okay, guys. Okay, I'm entering as well. So let's put our stop loss to 10 to 15 above the higher. Price is too volatile, so it's risky. Okay, guys, it's still a risk trade. So we are not aiming for like many pips, we are just aiming for like usual 10 to 12 pips. Okay, guys. Oh no, let me put the stop loss above the previous 15-minute candle. Okay, guys. At least let's wait and see. Let's wait and see. We move the stop loss above the high of the previous 15-minute candle. Before I place the stop loss above the high of the previous 5 minutes, but since the price has very high speed, so it can easily hit the speed can easily hit the stop loss above 5 minutes. So I put my stop loss above the high of 15 minutes. Okay guys, let's check what 1 minute is saying. Okay guys, on the daily candle, let's check how 1 minute is being formed. Okay. We do not look at the 1 minute, so it's okay. So we wait and watch, just like that. If you guys were watching my live stream, please like and subscribe my channel. Okay guys, this trade was based on 15 minute. Okay guys, 15 minute, and 15 minutes sometimes is not as, and 15 minute is not accurate as 30 minute and 30 minute and S1 are a stronger time frame than M15, because on M15 sometimes we get false signal. Okay guys, I entered this trade because it was a London Open. So I based this trade on 15 minute, even though it's a weaker time frame. So most of the time I based my trade on H1 and M30 time frame, but this being the London Open, I enter the trade based on the M15. Okay guys, so let's see how it turns. Looks like we're hitting our stop loss. Okay guys, so if it's lows, it's lows. Okay guys, we do not get too much disappointed, but it's natural to be disappointed by our lows and somewhat excited by our wins, but we do not get too much like involved in our one loss. Okay guys, so most probably it's hitting a stop loss. Okay guys, so it's important to take only one trade a day. Okay guys, it's important, so it's very important. This one is the second trade, so we are almost hitting our stop loss position. Okay, now we are out of our position. Okay guys, the 15-minute candles broke the high of the previous red candle. Now we are almost out of our position and we lose this trade. We lost this trade. Yeah, we lost this trade. Yeah, we lost this trade. So this is a losing trade. That's why it's very important to base our trading on the basis of M30, at least on the basis of M30 and H1, because sometimes M15 can give us false signal. Okay, I took this trade because it was the London Open time, so we should base our trade based on H1 and M30 time frame, because M5 and M15 can give us a lot of false signals. Okay guys, if you guys are watching my live stream, please like and subscribe the channel. and we learn from our mistake. Okay guys, we learn from our mistakes. And sometimes even when everything is perfect, every setup is perfect, sometimes we just lose the trade. Okay guys.